Welcome to The Explainer. Today, we're jumping right into a totally fascinating transformation. We're going to look at how a traditional electrical goods company morphed into an absolute market giant. We are going to completely deconstruct the incredible financial momentum of Polycab, pulling directly from their own data to understand the exact mechanics behind their massive success.
Now, just let this number sink in for a second. 1,099%. That is the staggering market cap return Polycab has delivered to its shareholders since listing just 7 years ago. I mean, this is what a true compounding wealth machine looks like in practice.
So, how exactly did they pull this off? Well, to figure that out, we're cracking open their Q4 FY26 financial presentation. This is the actual blueprint behind their massive 1.25 trillion rupee valuation. And we're going to look right under the hood to see the exact engine fueling it. Here's our roadmap for the Explainer today. We'll start by unpacking their record-breaking financials. Then, zoom out to look at their 7-year growth story. From there, we'll step inside their core wires and cables engine, explore the explosive growth in FMEG and solar, and finally, we'll break down Project Spring, which is their strategic blueprint for the future.
All right, let's jump straight into part 1, unpacking record-breaking financials, a look at FY26.
Starting right at the top line, the momentum here is just undeniable. Look at that robust 27% year-over-year revenue growth in Q4 alone. And for the full FY26, a 29% jump, completely crossing the 285 billion rupee mark. To be specific, they actually hit over 288.8 billion. Pulling off that kind of top-line expansion at this massive scale is incredibly difficult to execute. But hey, revenue is really only half the story, right? The true standout metric here is their 35% year-over-year growth in operating EBITDA for the full year. So what should you take away from this? It proves they aren't just buying market share by slashing their prices or squeezing margins. They are scaling highly profitably and operating with just incredible efficiency. That brings us nicely to part 2, the 7-year growth story, FY19 to FY26. Let's see how this momentum builds up by comparing their listing era to their current dominance today. Back in FY19, revenue was 80 billion rupees. Fast forward to FY26, and it nearly quadrupled to 289 billion. And you have to notice the net cash position. It literally exploded from 2.5 billion to an absolute fortress balance sheet of 41.9 billion rupees. Oh, and for the shareholders watching, that dividend payout skyrocketed from 3 rupees to 47 rupees per share. That right there is a masterclass in capital allocation and shareholder return.
Now, it's pretty easy to get lost in all these billions, isn't it? But we have to ask ourselves, what is actually driving these massive numbers on the ground? We need to pivot away from the high-level financial data for a minute and look at the actual physical business operations to diagnose the real fuel for this growth.
Well, it really comes down to a tale of 2 divisions. On one side, you've got the massive, steady, highly reliable wires and cables division, which is the historical core of the company. And on the other side, you've got the hyper-growth, fast-moving electrical goods, or FMEG segment. Let's look a little closer at part 3, inside wires and cables, the core engine. This legacy business continues to be an absolute powerhouse. Their domestic business grew a massive 30% year-over-year in Q4. And what makes this so impressive is that they actually gained a 4% total market share in the domestic organized industry. And they did it despite multiple industry headwinds. Also, it's worth noting that cables actually outperformed wires this quarter, but they aren't just winning at home. They've aggressively expanded their global footprint, adding 10 new geographies. For a largely domestic giant, being present in 94 countries worldwide is a huge shift in scale. Now, let's shift our focus to part 4, FMEG and the solar boom, hypergrowth. The big headline here? A staggering 47% year-over-year Q4 revenue growth specifically within the FMEG business. This segment is doing the heavy lifting to rapidly diversify the company's portfolio away from just heavy infrastructure and straight into consumer tech and green energy. In fact, full-year revenues for this segment hit an all-time high of over 20.6 billion rupees. And if you're wondering where that explosive FMEG growth is coming from, it's solar. Honestly, imagine a legacy cable company suddenly becoming a green energy kingpin. Their solar products practically doubled year over year, nearly 2x growth. And because of this massive surge, solar has officially become the largest single category within their entire FMEG portfolio. They position themselves perfectly to ride the massive wave of the green energy transition. Which brings us to the final section, Part 5, Project Spring and Beyond, the Strategic Blueprint. Because, none of this happened by accident. Management heavily credits Project Spring, which is their internal strategic execution roadmap, for making these continuous market share gains possible. Their forward-looking guidance is pushing the company toward incredibly ambitious 2030 targets. It is essentially their North Star. But here is where it gets really fascinating. Let's compare what they promise for the future with what they're actually delivering today. Their FY30 guidance for wires and cables EBITDA margin was 11 to 13%. Well, they just hit 13.1% in FY26. Their guidance for FMEG growth was 1.5 to 2 times market growth. Right now, they're delivering roughly 3 to 4 times market growth. They're already shattering their own timelines a full 4 years early. Also, for those of us tracking the modern market, it's absolutely vital to see that this financial heavy lifting is perfectly balanced by corporate responsibility. Tracking their ESG evolution shows a company that is maturing rapidly. From their first business responsibility report in 2020 to their first BSSR in 2022, undertaking greenhouse gas inventorization in 2023, and now culminating in the appointment of a chief sustainability officer. They aren't just building a giant, they're making sure they build a sustainable one. And that brings the whole story together under Polycab's overarching purpose, connecting all to a brighter future. When you look at their physical business, literally laying critical transmission cables and rapidly expanding solar infrastructure, this isn't just some generic corporate tagline. They are literally connecting the physical infrastructure for a brighter tomorrow, all while simultaneously brightening the portfolios of their investors. So we've seen the 1,000+% market cap growth. We've seen the flawless execution across legacy cables and that hyper-growth solar segment, with Project Spring targets already being shattered today, 4 years ahead of schedule. How high can Polycab's momentum carry them by 2030? It's a fascinating question and one that makes tracking their future earnings an absolute must.